Next up on the podium, we have Element 25. It is Justin Brown, who's the MD. He's a geologist with over 20 years of experience in global mineral exploration and mining, and has been involved in the full spectrum of mineral exploration through to mining in a range of commodities. So great to have you up on stage, Justin. We'll hand it over to you.
Thanks for that, and thanks for taking the time out of your day to come and hear our story. We're a little bit different to many of the stories you would have heard in this conference proceeding so far. We're all about manganese. So we were previously known as Montezuma Mining Company. Some of you may know us as a diversified explorer who's been on the ASX since 2006. We rebranded a couple of years ago to reflect the focus on a single commodity, which is manganese, number 25 on the periodic table, hence the rebrand. We are in the process of building a world-class zero-carbon manganese business, and we've got a strong growth pathway ahead of us over the next few years, centred on the Butcherbird deposit, which is located in Western Australia, just south of the iron ore mining town of Newman. Despite being listed since 2006, we still only have about 150 million shares on issue, testament to the fact that we are focused on shareholder return, and we haven't suffered from blowing out our share register over the years like some peers have, which means that in developing this deposit, we give shareholders a really genuine leveraged opportunity to benefit from the returns that will ensue. We've built, over the last couple of years, a really strong leadership team on the owner's side. We do complement that with select consulting groups that can bring specific skills to enhance our in-house expertise, but we do have a philosophy of in-house knowledge building, and we've generated a heck of a lot of IP around the Butcherbird project, both on the production of manganese concentrate, but also the downstream processing of our concentrate product to a battery-grade manganese sulfate product, which I'll get to in due course, but many decades of experience in the office working on achieving our goals. The message is pretty simple. We've got a massive deposit at Butcherbird. It's 263 million tonnes of JORC resources at the moment. Every time we drill there, we find more manganese. This thing will not run out of ore in my lifetime, nor likely those in the room, and possibly not our children's lifetimes. On our current production rate, we're sort of in excess of 200 years of mine life, if you include all the inferred resources. And again, every time we drill, we find more. So around this massive deposit, we've built a growth plan. And that plan starts with the first stage, which we're currently operating, which is the production of about 365,000 tonnes of manganese concentrate per year, which is targeted at the steel industry. That goes to our single offtake partner, OM Holdings, who convert that to a silica manganese alloy. And stage two is obviously looking to take advantage of that massive resource and expand the volume of production, which is only sensible given the size of the resource that we have. But really, I think the exciting part is the fact that we have, over the last 5 years, developed a flow sheet which can convert the high-quality manganese concentrate from Butcherbird to a high-purity manganese sulfate product for battery cathode manufacture, and or electrolytic manganese metal, both of which we have the ability to produce from this material. And then obviously we're talking about a generational transition to electrification, and we see a huge opportunity to expand after our first MNSO4 module is built at the end of and commissioned at the end of 2024 / early 2025. And that really goes to, I guess, the two parts to the manganese story. And for the uninitiated, manganese traditionally is a steel input. It goes in lockstep with iron ore. You need manganese to make steel, and so the demand ebbs and flows with the consumption of steel around the globe. And our first module of operation, which is the concentrate business, is targeting that well-established market. The new market is the emerging demand around the electrification of the world's vehicle fleet. To make electric vehicles, you need batteries, and to make batteries, you need battery materials. And you would have heard, I'm sure, endless stories around nickel, cobalt, and lithium. Lithium's been the market darling for the last couple of years. But manganese is the one that most people aren't aware of. It goes hand in hand with nickel and cobalt in the cathode. And in fact, there are emerging trends which show that manganese is likely to have a much more dominant role in battery chemistry in coming years. And that's what we're targeting in terms of the real growth generator for the business at Element 25. At Butcherbird itself, we have granted mining tenure. We've got an established operation targeting a small part of the global resource that's been drilled out to measured and indicated, giving us a 42-year base case mine life. We are fortunate to have the bitumen highway that goes up to Port Hedland, a stone's throw away. We've got an access road that's about 0.8 kilometres, so it's really a piece of cake from a logistics perspective. We've partnered with Regroup, formerly AK Evans, to do the mining on site and the haulage of concentrate to Port Hedland. In future years, we have access to the Goldfields gas pipeline for energy should we need it, although we are looking to lean towards solar and wind along with batteries for long-term power supply at Butcherbird. So we may not ever tap into that, but it is there should we need it. Geologically, Butcherbird is fantastically simple. It's a laterite manganese deposit. I sort of coin it that way because some of you would be familiar with nickel laterites. This is kind of a very similar beast without the complexity. It's a clay-rich laterite manganese deposit which sits as a bit of a thin skin and means that we don't need to use explosives to mine it. It's a free dig exercise. We mine above the water table. We don't have any reagents other than water. Really all we need to do is to wash the ore to remove the clays and deliver the commercial grade manganese concentrate, which is what we ship out to customers. So exceedingly simple mining operation, and we've established what's effectively a wash plant which takes the clays away, leaving behind the grey manganese concentrate. What you see there is very much a startup operation. It was done on literally the smell of an oily rag. I think we built it for a grand total of about $23 million, which is probably some kind of inverse record for a WA mining operation. And we are looking to grow on that with an expansion to about 1 million tonnes per annum of production in our next phase of growth. So just recently we had our first break-even quarter from an operating cash flow perspective. We've had some challenges with reaching nameplate production at Butcherbird. We've tackled those. We've got a number of new pieces of equipment mobilising to site at the moment, which will deal with the clay throughput challenges that we've had. And despite some pretty sort of intense unseasonal rainfall, which has caused some production problems on site in the last quarter, we managed to have an operating cash flow break-even quarter from which we will look to grow. So I think an exciting foundational quarter for us, and we've got some pretty aggressive plans to build on that and to generate returns, and then obviously look to expand production to really tap into the resource size that we have at Butcherbird. But the bit that I think gets me out of bed more than the other is the battery opportunity. And you would have needed to be living under a rock not to see the kinds of graphs that I've got on screen at the moment. Obviously, the electrification of the global vehicle fleet and also the grid from a battery storage perspective is well and truly underway. And the numbers that I've got there are not material in themselves except to show that this is going to be a massive transition over the coming decades. And the important part for you guys to understand is that manganese plays a really important role in that. It's not just nickel, cobalt and lithium. Manganese is equally a player. And the reason you probably don't hear about it so much is because there's very few of us doing it. So like rare earths and other downstream processing, it's dominated by China. We're looking to change that. And outside China now, there's these massive inflows of capital to build these gigafactories to provide the batteries for the electric vehicles that everybody wants to drive. And they're going to need a heck of a lot of manganese to do that, just like they'll need the other battery materials. So this is a reality now. It's not an idea. When we started this journey 5 years ago, this electrification sort of dream was an idea, and it hadn't really come to fruition. The first conversations we had with car makers about battery-grade manganese sulfate was, yeah, we want some, but we don't know how much we're going to need and when we're going to need it. Now that's completely changed, and people are knocking on our door to say we need this stuff and we need it in 2023, 24, which is when we'll be getting close to producing it. And one of the things that's driving interest in manganese is that if you're going to make all these batteries for all these cars, you need a heck of a lot of battery materials to do it. And the traditional chemistries, the NMC, which is the nickel, manganese, cobalt, have been moving towards a high nickel content over the last couple of years. And that's great, and nickel's a fantastic battery metal, but there's not a lot of it around. And so whilst I have no doubt nickel will enjoy a great future in batteries, what the battery makers now are doing is turning to manganese as the opportunity to provide the volume of material that you need for these batteries. Everyone's kind of understood that cobalt can't do it. They're kind of getting their heads around the fact that nickel can't do it, not in the current formulations. And so you're looking at chemistries going forward that are 2/3 manganese and a reduced amount of nickel and cobalt. So core takeaway is manganese is going to really play a more dominant role in these batteries, and people should pay heed to that, I think, if you want to look at the real leverage growth that's coming. And that's being translated to public announcements by the big guys as well. These guys are all sort of saying, well, look, high manganese is the future. We agree, and really it's becoming kind of an industry-accepted reality that the next generation of batteries will be high manganese, which much more significant volumes of manganese demand coming from that. And so, in other words, you've got this massive boom coming from EVs, which needs a lot of batteries. You need manganese in those batteries already. And then on top of that, you've got this kind of turbocharged layer of demand coming, which is about these high manganese cathodes. And so we win either way, but I think the high manganese cathodes are going to really turbocharge this commodity. And even in China, where you have an LFP, which is a lithium iron phosphate dominant battery chemistry, those LFP batteries are becoming LMFP batteries, so that the M again stands for manganese. So whichever way you look at it, manganese is going to do very well. And so what we've done is basically developed a flow sheet that takes our manganese concentrate and converts it to a high purity manganese sulfate. Stage 1 and 2 that you can see there are based around the concentrate business, tapping into this massive resource at Butcherbird. Stage 3 is the conversion of that material to a battery grade product, for which we're already seeing strong demand, and we expect that demand to really grow over the next 2 or 3 years as we get this conversion facility into production. The flow sheet that we've developed is significantly different to what is currently done in China. Manganese sulfate today, if you want to buy it, you need to go to China to buy it. There is nobody producing it apart from a very small production volume from Aerochem. You need to, to all intents and purposes, you have to go to China. Geopolitically, that's not the greatest situation, and so the world is looking for alternative sources of supply, and we plan to be one of those significant ones. But importantly also, the flow sheet that people currently use has significant damaging impacts on the environment in terms of waste residues, toxic reagents. They're relatively inefficient processes, and they're not low cost, whereas we have tapped into the skills and experience of our expert team, and we've spent about 5 years doing it, to develop a flow sheet that has a massive reduction in reagent consumption, carbon emissions and waste residues. So we have a flow sheet that produces effectively no solid waste, which is a massive transition from the current flow sheets. What you see there is a photo of our manganese sulfate. This is not something that I've pulled off a stock photo library. We have made this stuff. We know how to make it. We've made it multiple times. We're currently sending samples off to offtake partners or potential offtake partners, and we expect that to translate to solid offtake agreements in the next few months as we progress towards delivery of this project. We launched a scoping study in January, which sort of outlined at least an idea of what this could look like. Since then, we've reduced our costs, increased our volumes. We don't have a serious handle on capital costs, but our current estimate of 200 million Australian stands for the moment, and we're delivering a feasibility study in September, October, which will give you a more definitive view on the capital cost. And we've increased the volume, reduced costs, so you would expect the economics to improve. And we see this as the first of many modules, so we're doing a design one, build many approach, and the first one is probably going to be built in Malaysia, but we see an opportunity where we're going to build multiple modules over time in the US, the UK, and the Eurozone, where demand is growing for these materials. So expect to see the first one probably in Malaysia, but the plans pretty shortly thereafter to build multiple modules beyond that. Very, very scalable technology. We're going to do it sustainably, and I'm just about out of time, but obviously this is a par for the course for the mining industry now and downstream processing. You need to count your carbon, you need to show that you're counting your carbon, you need to be complying with modern slavery legislation, and you need to be looking at environmental, regulatory sort of frameworks that mean you've got a high standard of ESG compliance. We're doing all that as well, partnering with Circulord to deliver a supply chain transparency and traceability for our products, so that when people buy these products, they know exactly the history, the source, the provenance, the carbon intensity, and they can put it into their batteries with confidence that we're complying with the demands of the new world around ESG.
Just conscious of time there, Justin.
Yeah, and I'll wrap it up. So, massive resource, big growth story. We have a really simple mining operation now that we're looking to grow and deliver returns to shareholders. We are going to then pretty rapidly transition to being a battery material manufacturer by converting our concentrate to battery-grade manganese sulfate. That's in feasibility study stage. You'll see the outcomes of that in a couple of months' time. And we're looking to constantly grow this thing because it's a massive, massive resource. So you'll get a lot more news flow, as we go forward. But thanks for listening. Booth 120, if you want to hear more or get any questions. I think I'm out of time for questions, but Thank you for your time.
Thank you.